All right, let's get back to earnings. Take a look there. Jeffrey Small is with us, President, Arbor Financial. So we have a lot of big names coming up. I do want to rewind a little bit and go back to a name like Intel from last week. You could talk about some of these different names that have stood out, but let's start with Intel if you would.
Of course, it didn't have the big run up in the beginning. And so what seems to be catching fire in the rest of the market is what has value, what has the ability for earnings growth, and what's been beaten up the most. And Intel meets those three criteria. We see Intel rising from here. It's been relatively more stable than the market has been. It did kind of bottom out here in the mid 20s here a while ago. It has come back about maybe 20% since then. So it's on the tailwinds of going up. But the whole chip sector we see moving forward, growing with AI and all the other resources. The demands for chips going forward are going to be very large. And so the intrinsic value on Intel really is around $45 a share right now. So we see it's undervalued by at least $10 a share today.
Oh, wow. So undervalued by at least $10 a share. What about a name like Boeing?
Well, that's interesting. Fundamentally, of course, they looked overvalued on paper. But I will tell you that, obviously we've seen a nice rise in Boeing. I like Boeing from about a month ago going forward because we saw it was coming down the pike. Again, another stock that did not catch on fire with the rest of the market. And so, it's better to own the bus maker than it is to own the bus driver. And with the 737 MAX coming back and 5,000 backlogs of orders on planes, Boeing's future looks pretty good as we unwind from that COVID mess when they had to borrow money from the government, Nicole.
Yeah, and that's the whole thing. I mean, obviously, Boeing is a national security story. We think about Airbus and some of the other planes that are produced not here at home, but right now, 237. And Meta Platforms, what about this one? Came out with the numbers. Everybody's been loving Meta in 2023. It's the year of efficiency, too.
Well, we wouldn't say that their numbers were stellar, but they were positive enough to lift the stock price up. And we saw the stock price drop around 10, 11%. 3 days before earnings. And so the jig was up. Of course, we said, hey, we got to be able to buy some of this. This is a free gift. And of course, after hours, it shot up to over 325. And I think today it's racked down around 316. But I think as long as their earnings keep growing, we're going to retest those pre-COVID highs of around 376 at some point this year. However, if their top line or bottom line numbers disappoint, in 3-4 months down the line here, Nicole, then all bets are off for that target.
Yeah. I mean, is your mantra sort of to buy names that when they pull back or that seem to be beaten down a bit?
Well, of course. I mean, we certainly don't want to chase the epic rise of the Metas and the Teslas and the Nvidias. I mean, those three have done the best this year in the entire market. And so if we believe in those companies and we think they're fundamentally solid and they're going to outperform over time, then we want to buy the dips, obviously, on those companies. But what we don't want to do is we don't want to chase them at these all-time highs year to date.
Right, understood. And then as we look ahead, like a name like Amazon, which will be reporting earnings later this week, your thoughts there?
Well, I think the economy has really shocked everybody this year. As the stock market is leading and the economy is supporting it, I think Amazon is going to surprise to the upside here because the economy really is that strong. And, there were so many bears forecasting doom and gloom for the first 6 months of the year. What we're finding out is that that's just the opposite. I mean, we know the markets are rational, but so are economics. And so I think what everybody's forgetting, Nicole, is there's lots of X factors that are supplementing the economy right now. And so when you consider, we talked almost about this the last time we were on, the government is spending 40% more than they were on the overspend pre-COVID on our annual budget, which equates to a pretty decent-sized percentage of GDP. And so it's very hard to see the broad economic data be affected when the government technically is stimulating the economy by way of overspending. And so we find ourselves in this conundrum now, especially since the Fed does like inflation to a certain degree because it'll widen the gap between debt to GDP as a ratio. And so the old saying goes, you can't fight City Hall, but you also can't fight the Fed. And that's exactly what's happening here, Nicole.
Right. And that's exactly what's happening. I mean, everybody's waiting to see what happens in September and November. What about a name like Google? That's something you were focusing on.
We still like Google, but I'd be buying the dips. I would not be buying it at these valuations, and until I can see that earnings are going to be materially better. Even though they're going to be a huge player in the AI space, and so you definitely want to buy the dips on a Google for sure.
What do you think about where the market is headed? How important is this earnings season? This week, for example, we have about a third of the S&P 500 reporting. You said it's really important to see what happens. This week could be very telling. Why is that?
Well, it's telling because we have the biggest companies reporting this week. 130 companies are reporting this week, and the original forecast was negative earnings. Earnings were going to bottom out. We've had 7 straight quarters prior to this reporting period of earnings declines, and so we were heading into that earnings recession, right? Well, it looks like that this quarter has done the exact opposite. Earnings are positive. We're not going into an earnings recession. We're not going to go negative, and so rates obviously aren't affecting earnings at this point in time. It doesn't mean it can't happen, but it means today it's not. And so a lot of the forecasters, a lot of the analytics, a lot of the pundits and prognosticators in economics and the markets got it wrong, Nicole.
Yeah. I don't see Apple on the list, but do you have a thought on Apple?
I don't really have a bearing on Apple. Apple is they're going to find a way to eke out a positive number. The iPhone is pretty much maxed out globally. There's still some penetration in China, in the China markets, but there's not too much more that they can do. But once you leave Apple, once you stay with Apple, you never go back. And so they have a very loyal customer following. And as they broaden their platform to generate revenue, Apple is always going to be growing. I don't see Apple contracting unless we go into a global recession or depression.
So with the S&P right now, 4579 is where we are right now. We've been watching 4600. Where do you think we're headed between now and the end of the year? Obviously you don't know for sure, but where could we be headed, and what would be the catalyst for it?
Well, we're 200 points below the December 27 peak of 2021. And so if you're asking for a call on the S&P, my call on the S&P is going to be 4850 on 12/31 of this year. And so I see us going up, above the market peaks of December of 2021 to December 27th. And so that's where I say we're going to land based on present earnings trajectory and what we see the Fed doing going forward.
I didn't hear the number. Where are we going to land?
4850 on the S&P.
4850. 4850. Oh, yeah. And I'm hearing more and more about 4,800 plus. So, I guess there are really people who are feeling optimistic, while there's others who think we retest lows. There is this trajectory that could bring us there. Jeffrey Small, nice to speak with you, and thanks for coming on during such a busy week, too. Jeffrey Small, Arbor Financial. Thank you.